Okay, well, welcome back to class. So once again, this is the last section of chapter 6, and we're going to be learning what's called the lower cost or market. So as we know, right, this is 100% related to inventory. So what the lower cost of market does is that when we make purchases of inventory, we have to understand that the day that we purchase it, we have to adjust it at the end of the period, okay? Now, it also depends on what kind of inventory item we purchase. Now, oftentimes, your inventory stock, the more that you make purchases of inventory and you're trying to sell out your inventory, one thing that you have to know is that over time, the longer you keep your inventory assets, it's going to lose its value over time, okay? So this example here is that if I bought a laptop, right? I sell laptops, right? If I bought a brand new laptop as of 2018, and right now it's 2018 right now, you can expect that I'd be able to make that sale. But let's say because I bought a whole bunch of different varieties of laptops, and let's say this brand is not very popular, but it's still holding in my inventory. Do you think that fast forward, let's say 2020, I can sell that 2018 laptop for the same exact price?
No.
No. And you can absolutely be sure that it's not going to hold its value either. It's not going to be worth what it is. So that's why we have to assume that given with the purchases of inventory, over time, especially electronics, they become obsolete. They become, there's a new model coming out. Technology gets improved. So with that assumption, we have to know that when we purchase our inventory assets, we have to also make sure that we always reevaluate it and update what its current fair market value is. So with that being said, okay, so this is one of the exceptions to the historical cost. So we talked about this, right? We talked about the historical cost principle, where when you make purchases of assets, it must be at fair market value. In this context, when you purchase inventory, it can lose its value over time, especially if you're holding onto that inventory item for more than a year. Okay? You can't expect everything to stay and hold its price value, especially its cost, because then, once a new model comes out, everything that you have is an old model. You have two choices. You either discount it very, very low, sell it off as a refurbished price, or even give it out for free. Okay? Now, in most cases, a lot of people donate their stuff, so they give it to other organizations because there's nothing wrong with the asset. It still works. It's brand spanking new. It's just a little older because due to technology improvements, whatever improvement that they made with the newer model, it just works a lot better. Okay? So that's usually what happens. Okay? So when we're talking about the lower cost of market, we're going to be looking at 4 components. Okay? We're going to look at understanding the ceiling price, the floor price, the market price, and then lastly, to answer the question, which one's lower, the market or the original cost. Okay, so these formulas we'll take a look at again in the next scenario. So here's a scenario. I made a purchase of an inventory asset, okay? And here's my little table that says that I originally purchased it for $5.04. Okay, but fast forward, the market is now telling me that it's no longer worth $5.04. It's actually worth $4.89. Okay, so here my estimated price is going to be what I think I'm going to sell it out to the public for, right? I think $8.17 should be perfect because that not only does that my price point, it meets my 40% profit that I want to earn off of selling that item. Okay? And of course, if I don't sell that item, what is it going to cost for me to dispose the item? 87 cents, okay, to dispose the item, to either get rid of it, to sell it out at a lower price, or to even, throw it in the trash. What is it going to cost me to get rid of the items or to repurchase these items for in case someone wants to buy all of them out? It's going to cost me 87 cents, okay? And then, of course, my amount of profit is going to be based off of my profit percentage, which is 40%. So if I sell the item at $8.17, I want to make at least $3.28 profit. Okay. Obviously, these are margins. They're not accurate because I want to make at least 40%. So in this terms, 40% should be at least roughly $3.25. So these are rough estimates, or $3.28. That's what I want to earn based off of selling my item which cost me $5.04. Okay? So now that we have these information right here, I have my cost. I have what the cost of the market's telling me that it should be worth, my selling price, and my profit margin. So now I'm going to compute the 4 things. My ceiling is going to come first. So first is going to be my ceiling, which is going to be your selling price minus your cost of disposal. So once again, my cost is $8.17, and I'm going to subtract out my cost of disposal, all right? And that should give me a total of $7.30. Okay, so that's step 1. Now, step 2 is to solve for the floor price. So in floor price, the definition is actually to determine it as net realized value minus the amount of profit. But what we do know is that the net realized value is actually going to be your selling price minus your cost of disposal. So that's your net realized value, right? That's how much it's supposed to be worth. So here, I'm going to take my net realized value, and I'm going to subtract the amount of profit I have, right? So in this case, like I've mentioned before, net realized value is also known as your ceiling price. So ceiling, once again, is your selling price minus your cost of disposal to equal $7.30. You're going to take that $7.30 and subtract out your amount of profit, which in this case, your floor price is now $4.02. Okay? Now, we're going to go ahead and compare this. So, step number 3 says you're going to compare 3 numbers. You're going to compare your replacement cost, your ceiling price, and the floor price. So what these 3 numbers are, okay? If you think of a room, right? Your ceiling price is the maximum amount of money that you can charge. Okay? Where your floor is the minimum amount that you can charge. And then your replacement cost is just going to be it should be somewhere in the middle, right? That's what these 3 numbers are supposed to tell you. Okay? So what we're doing here is we're going to compare these 3 numbers, and we're going to see which one falls into the middle. So once again, we're going to place it on a number line just like this. Okay? We're going to compare my ceiling. We're going to compare my replacement cost of $4.89, and we're going to compare our floor price of $4.02. Which one's in the middle?
Replacement cost.
Your replacement cost is in the middle, right? That's what we're looking for. If we can determine that the replacement or whatever is in the middle, right? It doesn't have to be necessarily your replacement cost. It could be your floor cost. It could be your ceiling for some reason. Okay? As long as you take those 3 numbers that you have, your ceiling, your replacement, and your floor, you compare them on a number line, whether it's highest to lowest or lowest to highest. Whichever number falls in between, that's the number you're going to grab, and that's going to become your market price. Okay? So we determined that my market price is $4.89. So then the last question is, let's solve. Which one is lower? Your original cost or your market cost?
Market price.
Market price is lower, right? That's exactly what it is. It's lower cost or market. Okay. So once again, this is due to inventory losing its value over time, and the market is telling you that, hey, this doesn't cost us anymore. It is costing a lot lower now. It's significantly lower. It lost value over time. So this is a measurement that inventory managers must complete in order to accurately reflect their true assets. Okay, so once again, you cannot carry, again, if we use the laptop idea, if I have a 2018 laptop right now, I cannot expect that I can sell it for $1,000 right now at the market. No one's gonna buy it. For sure, no one's gonna buy it. They're gonna be like 2018 model, or let's say, like for example, the iPhone, right? The iPhone 11 is still $1,000. The iPhone 12 is 1,100, and then there's an iPhone 13 coming out. Would you buy the iPhone 11 for $1,000?
Not if I can get a better phone for $100 more.
Exactly. So this is the same concept and idea here. The iPhone 11, okay, yes, it's a later model. It's got, the picture's great. It's got all three cameras on there, right? Because I think that's when they introduced the three cameras. It's got everything that the iPhone 12 has, except the iPhone 12, it's just, upgraded more camera, more space. There's just a few tinkers on it that makes it process a lot quicker. So you can get a better phone, and we're in 2021 now. It's still the latest and the greatest. So at this point, the iPhone 11, nah, I'm not gonna buy that. Why buy it? Because it's gonna be trash, or gonna be obsolete in the next year, right? It's already 3 years old. So at that point, you cannot sell it at that price point. So right now, yes, it is right now on the market for $1,000, but no one's gonna buy it because you can get the iPhone 12 for $1,100. So you want to think of it that way. Okay, when you make purchases of inventory assets, depending on how old it is, and the longer you keep it in your inventory, right, you cannot expect to sell it the same price as you were back then, right, when it just released. Okay, so that is the idea here, and this is how you determine, well, if the market's going to tell me it costs $4.89, I need to verify, is that true? Did I pay for it at original cost of $5.04? Is that still valid, is the question, okay? And that's why we have to do all these calculations to determine, well, which one's lower, my market cost or my original cost? And if you determine that your market is actually going to be lower, right? We're using the conservation once again, right? We always assume that we're always going to take the lower end of everything, right? We never want to overstate our assets for any reason. So if the market value is lower than what we originally cost, you must adjust your inventory. Okay. So if you have read, right? So we're comparing those two numbers. If you have read the rest of the section here, you will learn about how to properly, journalize the cost of disposal or the loss on the, loss for purchasing or adjusting the inventory. Okay. But here, I want to go ahead and practice this once again. So here's the first one, right? This is what I want you to do. I want you to keep practicing how to do this. So in the next section, we have here, if I bought something at $4.01. Actually, wait, let me go back. Any questions? Before we move on, sorry. I realize I kept rambling on.
I do.
You don't think you do?
Until we get started, then maybe.
Okay. All right.
I'm in the same boat.
it was all Greek to me, but it's yeah. The more you explain it, the more it kind of like unfolded.
Okay. So once
I'm
again,
just wondering.
go ahead.
I'm just wondering if the original cost was 504 and you're gonna sell it at 9. Where does the 817 come from?
The 817 is what you want to make a profit off of. Remember, selling price includes your profit.
That's your markup and all that.
Exactly.
Okay.
Because you never want to sell your product at cost because then you're not going to make a profit or you're not going to gain
Okay.
anything out of it.
Okay.
Okay? So what we're doing here is we're breaking it down and we're dissecting it to a point where can we determine that this is that if I purchased it at original cost of $5.04, right? Is this going to be validated for me to continue selling my item at $8.17? If not, then I have to lower my selling price because I still need to meet the 40% profit. So once again, this is dealing with the person who's your profit manager, but these are numbers that you should be seeing, right? So if in fact that my lower cost is lower than my original cost, I have to make an adjustment to my selling price and I have to make an adjustment to my profit. Okay? So again, our focus has nothing to do with profit managers. All we care about is what I need to journalize. Okay? So if I need to adjust my inventory because my inventory is showing that I have products that are obsolete or expiring, I need to make an adjustment if I plan to keep it. Now, if I want to get rid of it, then there's a whole nother section which is going to be more advanced accounting. There is an actual proper way to dispose an asset, okay? And it isn't taught in this one because it's more advanced level of accounting, okay? But for here, you're not responsible for figuring out what the selling price is. You're not responsible for figuring out what the profit is. You're only responsible to determine whether you need to adjust your inventory or not. Okay? Does that clarify a little better?
Yes.
Okay. Okay, so let's go back to our scenario here. So if there's no more questions, let's go ahead and practice these calculations right here. Okay? So, if I purchased originally something for $4.01 and the market is telling me that it's no longer $4.01, it's actually $3.92, okay? The estimated selling price that I want to sell it at is $8. And for me to dispose the item for any reason that I need to, it's going to cost me 60 cents. All right? And then, of course, I want a 45% profit. So, therefore, I want to get at least $3.62 out of it. Okay? So, let's practice the first one. What's my ceiling price?
Your selling price is $8.
$8 minus.
The cost of disposal is 40 cents.
Okay, so $8 minus 40 cents. So, what is my ceiling price?
760.
760. Good. Okay. What is my floor?
You would take the 760
Mm-hmm.
and minus it against the amount of profit, which is 362.
362. Okay, so what do I get there?
398.
398. Okay, so now the next step is to solve for the market price. How do I solve for the market price?
You put those three figures on that line that you were talking about. The
Okay,
760,
good.
the 398, and let's see, let me.
I got 995. Is that correct or wrong?
No, there's no calculations involved when we're solving for the market price. So let's review that one more time.
I got to back up one, yeah, because
Okay.
I can't remember the other one.
Okay. So let's take a look at this one more time. We're trying to solve for the market price, right? We're going to compare three numbers. We're going to compare the replacement cost. We're going to compare the ceiling price. And we're going to compare the floor. So then, next step is we're going to place it on the number line, whether you put it highest to lowest or lowest to highest. So here, my highest is going to be my ceiling. Here, I just put in my random number for the replacement, which is the 489. And then my floor price is 402. So place the values in order. You don't need to list them yet, just place them in order, okay? My highest value is $7.30. My lowest value is $4.02. So that means in the middle is my $4.89, right? 49.80 is a lot higher than 402, but it's definitely less than 703 or 730. So here I compare those three numbers and I'm going to select the one that's in the middle. And my middle number just happens to be my replacement cost. Okay?
I just got it.
Okay? So let's take a look at this scenario once more. So we have my ceiling at 760. I have my floor at $3.98. What's my replacement cost?
It's 392.
It's $3.92. So let's compare the numbers. Which one's my highest value?
You're 760.
$760. What's my lowest value?
The 392.
So what's in the middle?
398.
$3.98. What does that number happen to be?
The floor price.
The floor price
It's my floor price. So therefore, because my floor happens to be in the middle, that means my floor is going to become my market price. So my market price is my $3.98. Okay? So lastly is the last step to answer the question, which one's lower? My original cost or my market value?
your market. Oh, wait, hold it. Which one's lower?
Yes, so we're going to let's compare.
Okay.
My original price or my original
Your
cost.
market price is lower.
Yes. My original cost is 401. I'm comparing that to my market. My market is 398. Which one's lower? The market. The 398. So that's going to be which one's lower. So in this case, I have to go now since I realized that I solved that my market is actually lower. So therefore, instead of lowering it down to $3.92, that's too much. It's only lowered by 3 cents, right? I have to adjust my inventory by those 3 cents. Okay? And then my profit manager is going to refigure out what the proper selling price should be. Okay? So that's how you figure that out. So let's go ahead and try the last one. If I purchase my item for $3.49, okay, and the market is telling me it's now worth $3.05, okay, I'm going to sell it at $8.25. To get rid of my item, it's going to cost me 95 cents. And I want at least a 42% profit. So that's why when I marked up my price at $8.25, I am expecting to get $3.50 out of it. Profit. So, once again, how do I solve for my ceiling?
That would be the 825 minus the 95.
Good. And what do I get there?
7:30.
7:30. Okay, I think the next one has all the answers. Okay, so we got 7:30 as my ceiling. What's my floor?
80.
380, okay. So compare those numbers.
The 380 and the 7:30, the 350, and the 380.
730, 380, and what was the other number?
350.
I think that's 305. Where did you get 350? Okay, we're not doing amount of profit. We're doing our replacement cost of 305
Okay, so we're looking at the ceiling, the replacement.
and the floor.
So it would be the 305.
305, is that more than 380 or is that less than 380?
Less than 380.
Less than 380. So therefore, can my replacement be my market?
Yes.
Let's ask that again. That's lower than 380.
Oh yeah. It's lower than 380.
So can my 305 be my market? No, because we're comparing those three numbers, right? Okay, so the highest value is 730. The lowest value is 305. So in the middle is 380. So 380 is going to be my market. And then lastly, what am I going to compare? I'm going to compare, is my 349 lower than my 380?
Yes.
Yes. So therefore, I don't need to make any changes because my original cost is good enough. It's already at its low point. I don't need to adjust my inventory because whatever I purchased it at, it still can hold its value because it is the lowest compared to the market. Okay, so good job. Okay, so when we do the exercises, I'm going to give you scenarios. Okay, and we're going to keep practicing it over and over. Okay, any questions? This part, I only need you to understand to just calculate it and where these numbers are coming from. That's it. Okay. So I was mentioning, so any questions in this particular, we're going to practice doing a bunch of these scenarios later on in the exercises.
Now, I read it last night and I didn't quite understand it, but then as soon as we started doing this, it's like, oh, okay.
Okay. Okay. Anybody else? Comments, concerns?
Just following along. I'm in the grasp of stuff. I think I got it. Not quite sure, but yeah, I'm still following along.
As long as you go ahead.
No, I'm doing this thing too.
Okay. 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 So, once again, the reason why we have to do this is because when we make purchases of inventory, we can't assume that they will hold its value throughout its years, right? That's why we must do this. We must adjust our inventory because due to the market, right? The market is going to basically tell us who's willing to buy at something at what price, right? If you guys understand economics, right? Everything's about supply and demand. People are willing to, we have to understand what the value of a dollar is and who is willing to spend that dollar, right? We have to make sure that our costs or our selling price meets the demands of our customers, our consumers, right? If we sell it too high, our customers are not going to buy it. If we sell too low, you can guarantee everyone's going to buy it, but you're not going to make a profit. So you have to understand that kind of type of model because Once again, that's the whole point of doing business, right? We're trying to make money. So if we sell too less, we're not going to make money. If we sell too high, no one's going to buy our product. So we need to figure out what kind of selling price allows us to get the profit that we want, but at the same time, get the customer to buy the product. And this is all dealing with that we can't hold the value of inventory the day that we purchased it. It's not going to stay the same if you fast forward 5 years later. You can expect that it's obsolete, it's gone, there's a new model. So you have two choices. You can either sell it at a low price and cost it at a low price, or you could get rid of it, period. Okay? So with that being said, if you've read Going on Forth, so this is what we're going to do when we are going to determine journalizing these the losses, okay? So there are two different types of methods of how we journalize the losses of or our adjustment to inventory, okay? So we're going to be looking at the direct method and the indirect method. So straightforward, the direct method allows you to adjust inventory, but not recognizing the loss on the inventory right away. Okay. Instead, we're gonna recognize the loss, and we're gonna assume that it was lost due to the cost of goods sold. Instead of recognizing the loss, we're just gonna shove it in the cost of goods sold. We're gonna say we lost that money by selling the item. Okay, which is actually, general rule of thumb, not the best way to keep track of your stuff. But then again, you also want to make sure that your books look good too. You don't want to be constantly taking a loss, because if you keep taking losses, the IRS are going to kind of be like, well, what's the point of doing business if you keep making losses? So that is exactly why maybe the direct write-off method could be useful for you. The indirect write-off allows you to actually properly acknowledge that you are taking a loss. Okay? And how we do it is, we'll show you exactly how we do it. We take it directly off from the inventory itself, and we place it in a little placeholder account. Okay? And then we write it off as a loss. So let's go ahead and take a look at both of them. Once again, I'm not going to be testing you on this because this is slightly more on the inventory manager section. But again, this class is bookkeeping. So in case you ever run into the scenario, you can always refer to this. And it's also in your readings as well. So here, right, this example here that you purchase 1,000 units at $1.25, right, on January 1st of 2020, okay? However, at the end of the year, you are adjusting the inventory, right, due to the market, all right? So the market tells you that it costs now $1.15. So record this adjustment. So here we are. We're comparing what happened here. So I don't know, whatever it is, right? It could be, let's say I'm trying to sell the iPhone or something, right? You can expect in 1 year it's going to lose value real quick, because what happens the year after? You release a new phone. So with that being said, this, obviously not the right, this is mugs. So in this case, January, my mugs cost me $1.25. It's telling me a year later, your mugs are no longer $1.25. It's now $1.15. So because I purchased 1,000 units, and let's say I never sold anything. They were just on the shelf for the longest time because no one wanted them. So now, fast forward a year later, or now it's the end of the year, we have to calculate how much it cost us to purchase those items. So my original purchase price was a total of $12.50, right? And now I need to compare what was my loss. Now if I look at it and calculate my inventory, it's now going to cost me at $1.15. So now I'm going to say that it's going to cost me now 1,150. So right here, I lost $100. Okay, so by looking at the direct method, right, we're going to directly take it right out of inventory and shove it into my cost of goods sold. Okay, so this is assuming this is periodic inventory, right? You know how you do your inventory adjustment at the end of the day. Once you do that at the end of the day, right, we have to increase our inventory, and then we have to increase our cost of goods sold. In this case, we're gonna shove it all out into and cost it out into the cost of doing business. All right, and we're doing it for that 150 for the amount that we are now costing it at, right? So this is assuming that we're doing at the end of the given period, right? We're doing the conversion entry, so this is what happens. Okay, so instead of placing the inventory items at $12.50, I'm going to place it in at $11.50. All right, and I'm going to subtract that out of my cost of goods sold. Okay. Now, what about the indirect method? If I were to use the indirect method, right, I have to use two accounts. I'm going to recognize this first. I'm going to enter it in my inventory exactly how it originally supposed to be. And then I'm going to recognize it and move it out of inventory by creating another expense account for the loss due to the market decline. And I'm going to take it for the $100. Okay? So this is a more proper way to do it than just shoving it into cost of goods sold, especially when you're transferring the inventory, right? This is the end of the given period. So this is us after we've completed our conversion entry. This is what we need to do. This is the necessary step. So we're going to enter in as if we're placing everything into inventory. And then we're going to create a second account, which is the expense account, to tell me what the difference was for that account. So this right here, the loss is another expense account, and the allowance for reducing inventory is a contra account. That's what's going to reduce your inventory, okay? And you're going to reduce it for the different amount. So once again, this is a little complicated idea, all right? And then I've also posted perpetual, which we haven't learned yet. But once again, I don't expect you to know this because it's too complicated. All I really want you to get away with this chapter or this ending chapter is, can you calculate and determine which one is lower, the market or the original cost? Okay, so no journalizing needed here, but because we are in the class of bookkeeping, our only main job is to journalize. That's exactly what the journalize will look like when you are trying to adjust the inventory. But we're not going to look into that once again because it is more advanced level of accounting. Okay, but I just wanted to make sure that you guys know that because it is part of your reading. And if you were curious, right, that's exactly what it would be. All right. Any questions so far? Say that again?
I said that was a lot.
Yes, it's a lot. But once again, I'm not going to teach you that because there's more important things that I'd rather you guys know more, such as periodic inventory and periodic sales. I need you guys to focus on that way more than the lower cost of market. Okay? Or at least journalizing the lower cost of market. I also need you to know since this is a real life scenario, right? Or we're doing accounting for the purposes of doing in real life, you also need to know that there is a reason why we need to adjust our inventory, and that's exactly why. It's because due to the market, and that's how you calculate it, but I'm not going to require you to how to journalize it. Okay. So any other questions? So as long as you have these 4 formulas, or actually 2 formulas and these 2 concepts, right? You should be able to complete this with no problems. Okay, so let's dive right into the exercises. So once again, I did not create this as an Excel spreadsheet because you'd be done with this in 5 minutes if you used the Excel spreadsheet. So I'm going to have you guys manually calculate this for me, okay?
Oh, I had the hardest time trying to figure out how to do the word into Excel. And when I transfer it, most of it did not transfer over.
Oh, it should be easy because you just copy everything in there and just pop it into the new spreadsheet. It should copy most of the majority of the items anyway.
Oh,
It should be
it did.
flexible.
It did, but mine was like chips, and then like 20 down lines, it'll be cups, and then 20 down lines, like cells.
Uh-huh.
I don't know where I did, and I was trying to like group them together, but yeah.
Oh yes, yeah. Sometimes, yeah. That's one thing too is like transferring information between the two programs. The funny thing is they're one company, but they still can't transfer a few things. Some things do get lost, yes. But yes, no, I did this on purpose so that we wouldn't finish this in 1 minute or so because once you know the formula, you can click and drag all the way down. So no, I'm gonna have you guys calculate it one at a time with me. All right. So here is the example here. So we have a few things here, right? We got about maybe 10 problems. So number 1, let's say I bought chips, right? I bought chips. Each per unit is going to be 80 cents, 89 cents per bag. The market is telling me, or maybe I bought the special chip, right? The special limited edition flavored chips. I say, okay, it's worth 89 cents when I originally bought it. But now the market says that, dude, these are long gone. They are now worth 49 cents. So now, what I originally sold it for was $3.99. And if I need to dispose it, right, get rid of it, throw it away, trash it, it's going to cost me 15 cents per bag. And of course, the amount of profit I want to gain out of that is $3.05. So, what is going to be my ceiling price?
384.
$3.84. So, how did we solve for that?
The 399
Go
sorry,
ahead.
go ahead.
No, go ahead.
The 399 minus the 15 cents.
Correct. Okay, so you should get 384. Wait, yes, 384. Good. Okay, what's my floor?
79 cents.
79 cents. Okay, right? You can take your 384, you subtract the 305 profit to get 79 cents. So let's compare my ceiling, my floor, and my replacement cost. Which one is going to be in the middle?
The floor price.
The floor price of 79 cents. So let's, in comparison, did I originally purchase it at 89 cents compared to my 79 cents? Which one's lower?
The 79 cents.
Yep, so that means I have to follow the market and say, okay, since these chips are, limited edition, I'm going to have to lower my cost. Okay? So then next is going to be cups. I originally purchased it at $2.59 per cup. Then the market's telling me it's no longer worth that. It's now $2.49 a cup. I originally sell this for $8.99. It's going to cost me 75 cents to dispose. And lastly, I want to get a $5.84 profit out of it. So, what is going to be my ceiling price?
24.
315.
How did you... Okay, hold on. So, go ahead.
Ceiling price minus the amount of profit would give you the 315.
315. Okay. And wait, amount of profit? That's not right.
Wait a minute, let me see. Oh, I might have. Let's see, ceiling price.
I got 824, but I'm not sure if I'm correct.
Oh,
That is correct. 824, right? We're going to take our selling price and we're going to subtract the amount of it costs to dispose it. So 899 minus 75 should give you 824.
I hate using a calculator. I put the profit amount in.
Yes, yes. All right.
You, Alan, you're ahead of me because I'm looking at it. I kind of understand the formula, but when I look at the numbers, I'm like, wait, which one am I taking away?
Okay. So like I said, if you copied this into Excel, it should be able to figure out everything for you in a matter of seconds.
Oh yeah, I'd be done in a minute.
Exactly. So, so what's my floor price going to be?
Let's see.
$2.40.
$2.40. So we can take our $8.24. Wait, what did you say?
Oh, I said $2.40.
$2.40. I think that is correct. So we're going to take our $8.24, right? And we're going to subtract the amount of profit, right? Which is the $5.84, which does give us $2.40. Okay, good. So now we need to compare our numbers. So which one is in the middle?
Is it
No calculations. Remember, we're just only comparing the ceiling price of $8.24, the floor price of $2.40, and our replacement cost, which cost me $2.49. So place that in numerical order. Which one's in the middle?
I would go to 548.
548. Where did you get that number?
I mean, well, I'm looking profit, ceiling, and floor.
We're not looking at profit. We're only looking at ceiling. So the two numbers that we calculated, the ceiling and the floor. And we're only comparing those two numbers with the replacement cost of $249.
249, yes.
$249 is in the middle. Yes, because my highest value is $8.24. My lowest value is $2.40. So right in the middle should be my $2.49. Okay? So therefore my market is $2.49. So then what is going to be lower? My market or my original cost?
Your market.
Your market of $2.49. So therefore I have to make an adjustment. Okay? So once again, I bought t-shirts, $1.98. It's telling me these shirts are obsolete. We got a new trend going on. So now it's down to $1.66. Right? I sell my shirts at $4.99 to dispose them, right? They're shirts. You can't just throw them in the trash. Well, you can. It's going to cost me 22 cents. The amount of profit that I want to earn from those shirts is $2.99. So what is going to be my ceiling? What is going to be my floor? Okay, first let's start for ceiling. What's my ceiling price?
477.
$4.77. Good. We took the selling price minus the cost of disposal. And then now we need to solve for our floor. What's my floor going to be?
178.
178. So let's compare the 477, the 178, and our replacement cost of 166.
178 is in the middle.
Correct. 178 is in the middle. Okay. So now we have to answer the question, what's lower? My original cost of $1.98 or my market price at $1.77?
The market price.
Oh, I'm sorry, set $1.78. Yes, the market price of $1.78. Okay. Once again, now we have pants, right? I bought them at $5.25 a piece. Maybe it's a new style once again. So now it's telling me it's now worth $4.98. And
Where did you
how,
see that $5.98?
where did you say that?
I see
525.
$4.89. I mean, $4.
498.
Yeah, 4.98. I'm sorry, I'm looking for a five. I'm sorry.
Okay, okay. I was like, I didn't know what I said either. So you could have stopped me there. So, okay, let's do it again. So we bought pants for $5.25. Okay. And the market is telling me now it's worth $4.98. Okay. I sell my pants at $14.99. And to dispose it's going to cost me $1.85. All right. And then lastly, I want to make an $8.15 profit off of these pants. So what is going to be my ceiling?
40?
What was that?
$3.40?
No.
17.
Where okay, what did Nicole, what did you use to solve the ceiling?
Oh, not the selling price, not the selling price. So it's a 14.99, right?
$14.99,
Minus the 185.
185, good.
13.17.
14.
13, what was it? Let me see. 9 minus 5 should be 14. Or 9 minus 5 should be 4. Good. 13, 14. Okay. What is going to be my floor?
$4.99.
$4.99. Okay. So then comparing my numbers, I have 13, 14. I got $4.99 and my replacement cost of $4.98.
$4.99.
$4.99. Okay, good. So I threw that in there to throw you guys off. Okay, so $4.99. Good. $4.99 is definitely above $4.98. So in this case, I'm going to compare. Was my original cost of $5.25 lower than $4.99 of my market price?
No, it's higher.
No, it's higher. So therefore, $4.99 is lower. Okay. Now we have some hats here. Okay. I originally purchased my hats for $2.58 a piece. The market is telling me now that it's worth $2.05 each. I originally sell them at $9.99. To dispose, it's going to cost me 59 cents. And I want to make at least a $7.49 profit out of each hat. So, what is my ceiling?
9.40.
940. What is my floor?
91.
What was that?
91.
Hold on. I only heard 91. Oh yeah, is that what you said? 91?
$1.91.
$1.91. Okay.
So they did a 940 minus the 749, right?
Hold on. Did I write 940 and 949? I don't know which one's right.
Should be 940.
Okay. So 940, yes, minus 749 should give you $1.91. Okay, good. So then let's compare. Which one? The market price is going is 191 in the middle?
No, it's 205. Your replacement cost will become your market cost.
Exactly, because remember, we got to compare. We got to put these three numbers in numerical order. Okay, so my highest value is $9.40. My lowest value is $1.91. My number in the middle is 205. So in this case, my market is 205. All right. So lastly, what is lower? My original cost or my market?
The 205.
The 205. Okay. And then here for toys, I purchased them at $1.05 each. And now the market's telling me that it's worth 98 cents. I sell it for $6.99. It's going to cost me 11 cents to dispose each item. And I want to make a $5.81 profit. So what is my ceiling?
$11.80.
Okay. How did you get it? Okay, so you added.
Yeah, I'm sorry. Yeah, yeah.
699 minus the 11 cents is 688.
688. Good. Okay.
Okay.
Now I want my floor price.
88 minus the 581 is $1.07.
Is $1.07. Okay. So then, if that's $1.07, let's compare. Which one's lower? My 688, my 107, or my 98 cents?
Which one's lower or which one's the middle?
Well, in this case, I want you to determine which one's lower, the replacement or the floor, because then that's going to determine what the number is. The replacement is lower, so therefore my market is going to be
107.
107. There you go. Okay. Now, if my market is 107 and I originally purchased my items at 105, which one's lower?
105.
105. So here, I don't need to make a change because it's already lower than the market value. Okay. All right, so then here I bought these special limited edition pens that cost me 78 cents per pen. The market's telling me now it's worth 33 cents, and I originally sell them at $2.99. It's going to cost me $7 cents to dispose, and I want to make a $2.24 profit off of it. So, what is going to be my ceiling?
75 cents.
Okay, what numbers are you using, Felipe?
No, 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 no. I'm trying to get the formula right. I'm just subtracting. I think I'm off.
292.
Yes. So here, Felipe, we're taking our selling price, right, of the $2.99,
Yeah.
and we're gonna subtract our cost of disposal for the 7 cents.
Oh, yeah. Okay, okay. Yeah, yeah. I'm trying to. Yeah, okay. I'm on it. All right.
Yes.
It clicks. It clicked.
Okay.
It's clicking. That's
All
a
right.
slow train. Every morning, yeah.
You accidentally took the profit margin and subtracted that number. So in this case, that's the next step, okay? So first is the 292 is our ceiling. Okay? Now we got to take our 292 and now we subtract our amount of profit. So how much should we get?
68 cents.
68 cents. Let me see, 2, 12, minus 4, good, 8, good, good. So 68 cents, okay? So now let's compare. We got our ceiling of $2.92. We got our floor for 69 cents, 68 cents, and we have our replacement cost at 33 cents. So which one should be in the middle?
68.
The 68 cents. Good. So let's compare. Which one's lower? My 68 cents of my market value or my original cost for 78 cents?
68.
68 cents is definitely lower. So here I got to adjust my inventory by 10 cents per pen. All right, go ahead.
Can we go back to the hats? Because I think that's where it threw me off. Because
Okay.
okay, so can we go back to where the market price ended up being 205 and everything else kind of falls in line?
Okay.
But so yes.
Okay.
Okay.
Okay, so Len, Felipe wants to redo this one. Okay, so we'll redo it real quick. All right. So Felipe, what's my ceiling price? Okay, if I originally purchased every of my hats at $2.58, right? And the market is telling
Where
me
did you get $2.58? I got two oh.
this is what I bought it for. The 258.
Okay. Sorry. Yeah.
Okay? That's what I bought it for.
Okay.
The market's telling me now it should cost you $2.05.
Okay.
Okay? I sell my hats at $9.99. It would cost me 59 cents to either buy more of that same exact hat or to go dispose it. That's what cost of disposal is. It's going to cost me money. Okay? And then I calculated my profit to be I want $7.49 out of it. Okay? So let's go ahead and take one step at a time. So what's my ceiling price going to be?
$720.99.
Thank you.
Oh no, I'm sorry. You're
No.
on the apps.
No. I want to follow along. It's just it boggled my mind. I'm like, everything else kind of fell in line, but this number did not.
Okay. So Felipe, how do I solve for my ceiling?
So we're gonna take the profit in the sales.
No.
Okay. I'm following along. Just teach me.
I'm teaching you right now. So
Okay.
what's my selling price?
$9.99.
$9.99. Okay. Now the formula is your selling price minus your cost of disposal. So how much is it going to cost me to dispose the item?
59 cents.
59 cents. So what is $9.99 minus minus 59 cents?
740.
Try again. 9.40. Good.
Yes.
Okay. Now the formula for my floor is to take my ceiling price minus my amount of profit. So in this case, what is my amount of profit?
749.
749. Okay, so you're going to take 940 and you're going to subtract the 749 out of it, and what do you get?
191.
$1.91. So now we're going to stop, no more calculations, because now we're going to compare 940, 150, 191, and my $2.05, because we're taking only the replacement cost. So comparing that, which one's the highest one?
Of course, the 940.
940, good. So which one's lower? 205 or 191?
The 205. Oh no, 191.
191's lower. So therefore, what is going to be in the middle?
Let me do my math.
You don't need to do math.
The 205. Yeah.
The 205 is going to be in the middle. So there you go. That's your market. That's what is determined as the market is whatever, when you take those three numbers, you put it on a number line, right? You place it either highest to lowest. You're going to find the highest value, you're going to find the lowest value, and what number happens to just be in the middle between those two is going to be your market value. So in this case, right, we determined 940 is my highest value. We determined that $1.91 is my lowest value. So what's going to be in the middle? The 205. So that's going to be my market value, is my 205. Now, we got to answer the question, which one's lower? My original cost or the market cost? Or market price, market value, whatever you want to call it.
The market price.
Market price of 205 compared to 258.
Yeah.
That is definitely lower. So 205 is definitely lower. So that is how you solve for it. Okay?
Okay.
You know,
Hold
know, for
get,
some
Felipe?
reason I got stuck on that one, and I'm like, my brain kept going back to yeah.
Felipe, if we go on the Word document, once we downloaded it to fill in the sheet, underneath ceiling price, you could type in there to make it easier, just so we could like correlate the numbers together. So under ceiling price, I put in there selling price minus cost of disposal,
Oh,
and
like
then
that.
floor price, ceiling price minus profit amount. And
Mm-hmm.
then for that number, the replacement cost, the ceiling and the floor, I highlighted those three numbers so that way I could reference them to the three that I have to put for the market cost.
Good.
Okay.
So then under market cost, you could put middle number, high to low, ceiling, floor, and replacement. So we know exactly what we're working on for that area.
Excellent.
That's yeah. I like that. I like that.
Okay.
I don't know, is there a way that I could add how I took a pic, how I did that onto the chat?
Yeah, you can, but the only thing is that once we close out this session, you can't view it ever again.
No, yeah,
So,
yeah, yeah, just so they could see it.
oh yes, 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 you can. So, when you hold on, let me pause the recording real quick. Continue. Okay. So we have one more left to do here, right? We have our laptops, okay? We originally purchased them at a cost of $584.60, okay? The market is telling us that it's not that cost anymore. It's significantly lower. It's $562.17 now. Now, I originally sell these at $849.99 a pop, okay? And to dispose it, right? It's very expensive to dispose computers. It's going to cost me $129 to dispose. And then, of course, I want to get at least $127.50 profit out of it. So what is going to be my ceiling?
720.99.
$720.99. Excuse me. So you took the $849 minus the $129 should be $720.99. Good. What's my floor?
593.49.
$593.49. So we took my ceiling of $720.99 minus the $127.50, which is my amount of profit, to get me a total of $593.49. Excellent. So then let's compare. I have my ceiling, I have my floor, and my replacement cost is now $562.17. So what is going to be in the middle?
562.17.
Let's look at this again.
593.49.
593 is definitely higher than 562. Okay?
Oh, yeah. I thought you said what's in the middle.
Yeah, what's in the middle?
562.
Yeah. Oh, I must have misunderstood you. Okay.
Okay.
849.99 and okay.
So
Yeah,
we're
your three costs that you're going to compare are 720.99, 593.49. Then the lower one is 562.17. So the 593.49 would become your market price since it's in the middle.
Okay.
correct.
Yep.
Yes, because again, we have the highest set at 720. The lowest is the 562, and in the middle between that is 593. So again, visually, you might mistaking that 9 for a 6 or a 6 for a 9. So make sure you pay attention very carefully. So in this case,
I think it's so easy that we're overthinking it and we're thinking like right past it.
okay.
I think so. I have a tendency to
think if
overthink
we-
everything.
Yeah, I think if we like for me, I'm gonna start like just writing down the three so I can grasp the concept better.
Draw, like I said,
We're overthinking it.
exactly how I've displayed it in the PowerPoint, right? If it helps
Right.
you, write down those three numbers and actually put it on a number line and actually place it in the order. So let me find my number line real quick. I don't think it's that one.
Or even
It's
just on top, it's just stack them instead of having them across.
exactly. Stack them, have them across, compare them. Well, what's my highest value? What's my lowest value? What's my middle number? And then determine, well, what happens to be my middle number? It's my replacement cost or my floor. And then that's going to determine your market. So however way that you want to understand it, this is the best way I can say is take those three numbers, put them in numerical value, whether it's highest to lowest or lowest to highest. You're going to take the one that's in the middle. Straightforward. Okay. So great. So now that we got our market, so what is going to be lower? My original cost or my market?
Because the lowest price would be the market cost.
Okay. So my original cost is $584.60.
Oh, the original cost. The original cost.
Okay. And my market is $593.49. So in this case, the original cost in this case is lower. So that means no adjustments I need necessary to make for my inventory. Okay. So once again, this is all I'm going to be testing you guys on is just being able to understand why we do this, how we do it, and determine whether you need to adjust your inventory or not. Okay. So any questions?
Nope.
All right. Okay, so we're gonna stop here.